Let's talk with Scott Gecas, and he is with Walsh Trading in Chicago. He joins us right now. Wanted to point out one thing here, Scott. Deliveries were out this morning for the July contract, and just wanted to share with everybody, we had 1,578 contracts of corn posted for delivery today, and we had soybeans jumping up to 741 contracts. Didn't seem to hold the market back one iota. Why would that be?
Yeah, I think the biggest reason why you're seeing the big rally in corn and soybeans is the good versus excellent. It's well below last year, well below the 5-year average, so that's definitely adding a little bit of a bullish catalyst to the upside. I think that's the biggest reason why you're seeing that. Plus, it is a little bit of a light volume day with the holiday, which is expected. What that usually means is any type of decent volume is going to push it one way or the other. So that's something that you got to keep in mind. We're going to see how these markets open up on Friday. We have unemployment. That's going to maybe throw a little wrench in the mix. We'll see how that really is going to go. But, right now, the good versus excellent is definitely driving the market. We'll see what that crop progress is going to be on Monday.
After this sell-off, and there's still a debate over whether we really did close that gap in that September corn contract or not. It was within a tick. What do you consider to be the footing on this rally here so far? I mean, is it on firm ground, do you think? Is the low in temporarily, or do you think we could still turn around and take this out yet on Friday?
Yeah, well, it's going to be really interesting to see how these markets shape up over the next few days. Everyone still has those big debates about those crop report numbers that came out last week. Mm-hmm. So, I mean, that's always going to be a factor. But right now, that good versus excellent is definitely driving this market. You're seeing a lot of upside calls being bought. Whether or not the low's in, I mean, that's yet to be known. It's really going to determine on the volume as well as some of the other headlines that are going to come out.
If the premiums on those calls have been coming up in value, wouldn't that indicate, and I don't know if they are, maybe you can comment on that, are they increasing in value? If they would be, that would mean the trade does not believe those numbers.
Oh, yeah, and right now for corn in particular, the upside calls are holding about a $2 premium, meaning that you're going to pay about $2 more than the downside puts. And, so the volatility is still going to remain high just because there's a lot of unknown factors and that debate going back and forth with those numbers, whether or not they're true, believable, or not.
All right. We'll come back in a moment and take a peek at what's going on in our livestock trade, too. Scott Gecas is our guest, and we'll be back after this. Well, on the lean hogs right now, let's go ahead and start with that August contract. It is 83 cents higher at 79.80, and you have the October 70 higher at 73.75, but I will put an asterisk on that. That's over $1 off of its earlier high this morning. So we're higher, but we have come down more than what we're gaining right now from our earlier high. So choppiness in the lean hog trade. I guess nothing new there, huh, Scott?
Yeah, right. With the lean hog in particular, there's all kinds of stories swirling around with the African swine fever again. Again, it's supposed to be, there's reports that it's a lot worse than expected. China's starting to ban supplies from other countries that have reported African swine fever. So, it sounds like they're trying to contain it the best they can. It's just not working at all. So we have to wait and see how this is really going to play out. We expect with the trade war truce to come in a little bit that China's going to continue to be a buyer. So we have to wait and see what those numbers are really going to come out next week.
The seasonal trends are for cattle prices to rebound this week, aren't they?
I'm sorry?
I just wondered, the seasonal trend on cattle and beef prices, they usually rebound about this week of the year, don't they?
Yeah, well, we're running into a weird dynamic with that because usually that demand's going to pick up, but because of that demand, the rain and the weather is definitely throwing a wrench into that whole mix. And with the weather reports coming out left and right, with the rain coming in through the holiday, that demand might taper off a little bit.
Okay, let's take a look at the beef cutout values. And again, thank you, Scott, for joining us today. Scott Gecas of Walsh Trading in Chicago.